What is happening, crypto crew? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The news cycle is absolutely exploding, and you do not want to miss what's dropping today. We've got seismic shifts, incredible surges, and some major players making bold moves that could redefine the game. Get ready, because this is your unmissable update. First up, a groundbreaking partnership is set to revolutionize how we see digital data. We're talking about a government-backed initiative that could bring unprecedented trust and transparency to the blockchain. You won't believe who's leading the charge and what it means for the future of decentralized systems. Then, hold on to your hats, because a new contender is shaking up the crypto space, drawing comparisons to the legends themselves. Analysts are buzzing about its potential, its unique strategy, and why it's being hailed as the next big cultural catalyst. You need to hear this. But wait, there's more. We've got a story where a Trump-backed merger is sending shockwaves through the mining sector, causing a massive surge in one company's stock. Find out how this political alignment and strategic consolidation is impacting the market and what it signals for Bitcoin's mining dominance. And finally, we're diving deep into the psychological landscape of the market. Is Bitcoin finding its balance? We'll break down the sentiment shifts, the institutional play, and a prediction that could see Bitcoin hitting astronomical numbers. Stick around, because you're about to get the full scoop on everything that matters. Don't go anywhere. Hit that like and subscribe button and ring that notification bell so you never miss a beat. Government data revolution, a new era of trust. The digital asset landscape is constantly evolving, and today we're witnessing a development that could fundamentally alter how we interact with data in the decentralized space. The U.S. Department of Commerce has partnered with Pyth Network, a move that signifies a significant step towards enhancing transparency and verifiability in economic data dissemination. This collaboration aims to leverage Pyth Network's robust on-chain data infrastructure to ensure that critical economic information is not only accessible, but also cryptographically verifiable and immutably recorded on the blockchain. Secretary of Commerce Howard Lutnick has highlighted this initiative as a testament to U.S. leadership in digital finance and data innovation, positioning it as a cornerstone for building a more trustworthy and efficient global data ecosystem. Pyth Network's technology is engineered to provide real-time, high-fidelity data feeds crucial for a myriad of decentralized applications, dApps, and smart contracts. Its ability to offer cryptographically verifiable data means that users can be assured of the integrity and origin of the information they are consuming, a critical factor for financial applications, supply chain management, and countless other blockchain-based solutions. Currently, the network supports an impressive array of over 100 blockchains and serves more than 600 applications, demonstrating its widespread adoption and utility. This partnership with the U.S. government is expected to further cement its role as a vital piece of on-chain data infrastructure, bridging the gap between traditional data sources and the burgeoning world of decentralized finance, DeFi. The implications of this move are far-reaching. For the DeFi sector, which relies heavily on accurate and timely data feeds for everything from lending protocols to derivatives, this partnership promises enhanced security and reliability. It could also pave the way for greater institutional adoption of blockchain technology, as governmental endorsement and integration of such systems lend a significant degree of legitimacy and trust. While Bitcoin itself saw a slight dip of 0.18% on August 29 amid general market volatility, the Pyth Network's PYTH token experienced a remarkable surge of 99.01%. This surge is a clear indicator of the market's positive reception to Pyth's growing role in on-chain data infrastructure, especially as institutional interest in verifiable data solutions intensifies. Interestingly, this development occurs against a backdrop where Bitcoin's market dominance stood at 53.75%, while Ethereum continued to show strong performance. Analysts have observed a notable shift in investor flows, with a growing preference for Ethereum-based innovations and increased DeFi adoption. This suggests a market where, despite Bitcoin's foundational status, the utility and innovation within the broader ecosystem, particularly in areas like data infrastructure, are capturing significant attention. Even as institutional players like MicroStrategy continue their Bitcoin accumulation strategies, the market is clearly dynamic, influenced by macroeconomic uncertainties and strategic partnerships that signal a maturing digital asset space. But what does this mean for the average investor looking for the next big opportunity? We're about to explore a project that analysts are calling the next cultural crypto catalyst, drawing comparisons to legendary meme coins. MAGACOIN Finance, the next cultural crypto catalyst. In the ever-shifting sands of the cryptocurrency market, a new project is generating significant buzz, with analysts upgrading its outlook due to rapid pre-sale sellouts and intense investor demand. MAGACOIN Finance, an Ethereum-based cryptocurrency, is drawing comparisons to early-stage phenomena like Shiba Inu and Dogecoin, not just for its speculative potential, but for its growing cultural resonance. This project is strategically positioning itself as a Bitcoin alternative, a bold claim that hinges on its scarcity-driven tokenomics and the inherent potential for rapid price appreciation, often seen in smaller market cap assets. The project's tokenomics are meticulously designed to foster scarcity, a fundamental principle that has historically driven value appreciation in digital assets. By emphasizing a structured supply model, MAGACOIN Finance aims to create a dynamic where demand outpaces supply, potentially leading to significant price swings. While it doesn't position itself as a direct competitor to Bitcoin's established dominance, its strategy leverages the market's appetite for assets with high growth potential. Operating with a smaller market capitalization than Bitcoin, MAGACOIN Finance offers a different risk-reward profile, attracting investors seeking potentially asymmetric returns. This approach recognizes that while Bitcoin remains the benchmark, there is ample room for innovative projects to carve out their niche by offering unique value propositions and growth trajectories. The cultural alignment of MAGACOIN Finance is proving to be a significant differentiator. Its branding and associated narratives extend far beyond the typical crypto enthusiast circles, managing to capture the attention of a broader audience. This wider visibility, amplified by its connection to prevailing political and financial conversations, is helping it gain traction rapidly. It's this blend of speculative appeal and cultural relevance that has led some analysts to dub it the next cultural crypto catalyst, suggesting it has the potential to capture mainstream imagination in a way few altcoins have before. Furthermore, the timing of MAGACOIN Finance's emergence is particularly astute, coinciding with key market events that could favor its growth. As Ethereum prepares for a substantial staking unlock, estimated to be around $2 billion, the market anticipates potential liquidity shifts and increased volatility. Historically, such events have often triggered a rotation of capital towards smaller, high-upside altcoins. MAGACOIN Finance's presale nearing its final stages positions it perfectly to capitalize on this potential capital flow. Adding to this dynamic is the ongoing uncertainty surrounding Federal Reserve interest rate decisions, which creates a complex macroeconomic backdrop that often drives investors to seek alternative assets with higher growth potential. Analysts are closely watching MAGACOIN Finance as it navigates these crucial stages. The strong participation in its presale signals considerable early confidence from investors. As the project moves towards its public launch, the interplay between its scarcity-focused tokenomics, the evolving market sentiment, and its unique cultural appeal will be critical in determining its long-term success. While the potential for significant returns is evident, the inherent risks associated with early-stage cryptocurrency investments cannot be overstated, and thorough due diligence remains paramount for all potential investors. While this new contender is making waves, a significant development in the mining sector is also capturing headlines. We're seeing a massive surge driven by a Trump-backed merger that could reshape the Bitcoin mining landscape. Griffin surge, Trump-backed merger fuels 231% stock jump. The cryptocurrency mining sector is witnessing a dramatic surge in activity and valuation, spearheaded by Griffin Digital Mining. Its shares have experienced an astonishing 231% climb since May, propelled by the anticipation of its merger with American Bitcoin. This strategic union is not just about expanding mining capacity. It's also a politically charged move, as American Bitcoin is backed by prominent figures associated with Donald Trump. The combined entity is slated to begin trading on the Nasdaq under the ticker ABTC by early September, marking a significant moment for crypto-related equities. The deal itself is structured as an all-stock transaction, a common approach for consolidating assets in the evolving digital economy. Under the terms of the agreement, Hut 8, American Bitcoin, and their respective teams will collectively hold a commanding 98% of the newly formed entity. Adding further weight to this venture are the Winklevoss brothers, Gemini co-founders, who are participating as anchor investors. Their involvement underscores the significant potential seen in creating what is intended to be the world's largest pure-play Bitcoin miner. CEO of Hut 8, Asher Genut, highlighted the strategic financial advantages of this merger, suggesting it offers a more streamlined path to financing compared to a traditional initial public offering, IPO. The market's reaction has been overwhelmingly positive, with Griffin's stock price reflecting the confidence investors have in the merger's completion. The recent 42.1% jump in Griffin's shares to $1.75 on a single Thursday exemplifies this optimism. The overarching goal for the combined company is to establish itself as the preeminent force in Bitcoin mining, not only through operational efficiency, but also by building a substantial Bitcoin treasury. Hut 8 is already bolstering its infrastructure, with plans for 4 new U.S. data centers that will offer a total of 1.53 gigawatts (GW) of capacity. These strategic expansions are designed to support American Bitcoin's ambitious growth plans, which also include potential overseas investments to broaden investor access beyond the U.S. market. This consolidation arrives at a time when the broader crypto market is experiencing a resurgence in IPO activity. Several prominent crypto firms, including Circle and Bullish, have successfully launched on public markets this year, signaling renewed investor appetite. The trend is further fueled by evolving U.S. policy landscapes. President Donald Trump's executive order in March 2025, establishing a national strategic Bitcoin reserve, and the passage of the Genius Act in July, which aims to regulate stablecoins, have collectively bolstered investor confidence in crypto-related equities. These policy shifts create a more favorable environment for companies operating within the digital asset ecosystem. American Bitcoin, launched earlier this year, has been methodically building its Bitcoin reserves through both mining operations and direct purchases. The company also has strategic plans for international expansion, including acquiring an Asian firm to augment its BTC holdings. Its financial backing includes a mix of influential crypto and traditional investors. The involvement of Eric Trump and Donald Trump Jr. has drawn attention with their stated vision for a decentralized financial system. While scrutiny regarding potential conflicts of interest has arisen due to their families' political roles, company leadership maintains that American Bitcoin's operations are entirely independent of governmental influence. Hut 8's own financial performance also adds to the positive outlook, with strong second-quarter results reported, including significant revenue and net income figures. With such major shifts happening in mining and data infrastructure, what's the latest on Bitcoin's market sentiment and future price predictions? We're looking at a balanced market psyche and a bold forecast that could see Bitcoin reach unprecedented heights. Bitcoin's psyche, a balanced market and a $1.03 prediction. Bitcoin's market sentiment has reached a pivotal point, registering a neutral score of 50 on the Fear and Greed Index as of August 29. This indicates a market in equilibrium, where neither extreme fear nor excessive greed is dominating investor sentiment. This balanced state follows a period of considerable volatility, suggesting a potential stabilization that could set the stage for a more predictable market trajectory. The index's movement reflects the diverse influences at play, from technical indicators to broader macroeconomic shifts, and its neutral reading implies a market pausing to assess its next move. Despite this sentiment shift, Bitcoin's price action remains somewhat subdued, caught in a recent downtrend. This is largely attributed to a divergence in market participants' behavior. While retail traders have been actively buying on price dips, signaling a degree of optimism, larger institutional players have continued to exert selling pressure. This dynamic creates a tug-of-war, with retail buying insufficient to overcome the selling volume from institutions. Data from major trading platforms indicates that cumulative volume delta, CVD, shows increased retail engagement in buying the dips, but the net effect is being counteracted by institutional selling, keeping Bitcoin's price constrained. Looking ahead, the long-term outlook remains bullish, buoyed by significant macroeconomic factors and expert predictions. Bitwise, a prominent crypto asset manager, has issued a striking forecast, predicting Bitcoin could reach $1.3 million by 2035. This projection is underpinned by Bitcoin's inherent scarcity, its role as a potential hedge against inflation and currency devaluation, and the continuously growing demand from institutional investors. The increasing U.S. national debt, with annual interest payments nearing $1 trillion, is seen as a strong catalyst for assets like Bitcoin that offer a fixed supply and an alternative store of value, drawing parallels to gold's traditional role. Bitcoin's fixed supply, with its issuance rate projected to decrease significantly in the coming years, is a key structural advantage. As the annual supply issuance is expected to fall to a mere 0.2% by 2032, the cryptocurrency's scarcity is expected to intensify, further driving demand, especially in an environment of monetary easing and rising inflation concerns. This scarcity, coupled with increasing institutional adoption, evident in the growing holdings by publicly traded companies and corporate treasuries, suggests that supply-demand imbalances are likely to become more pronounced. The influence of institutional capital, capable of moving thousands of Bitcoin at once, far surpasses the daily mining output, highlighting their growing impact on market dynamics. However, the path forward is not without its challenges. Regulatory uncertainties and evolving legislative frameworks in major global markets present potential headwinds. Furthermore, Bitcoin's relatively short history means that long-term price predictions inherently carry a degree of uncertainty due to limited historical data. Despite these factors, the prevailing macroeconomic climate, combined with Bitcoin's unique properties, presents a compelling case for its inclusion in diversified institutional portfolios. As more asset managers and corporations allocate capital to Bitcoin, its market dynamics are expected to mature, with a shift towards more sophisticated investment strategies. And that's a wrap on today's essential updates. Let's quickly recap the biggest stories and tell you how to stay connected for more. All right, crypto enthusiasts, that's a wrap on another packed episode of Bitcoin Bulletin. We saw a groundbreaking government partnership with Pyth Network revolutionizing data, MAGACOIN finance emerging as a potential cultural crypto catalyst, a Trump-backed merger sending Griffin Digital Mining stock soaring, and Bitcoin's sentiment balancing out with a massive long-term price prediction. Don't miss out on any of the action. Smash that like button, subscribe to the channel, and ring the notification bell to stay ahead of the curve. Follow us on all social platforms for more real-time updates and join the conversation. We'll see you in the next one.